For most of us, the financial crisis has been a struggle. For Ari Bergmann, it has been an opportunity. Back in February of 2008, he started the Global Crisis Fund, a hedge fund designed to take advantage of market dislocations and volatility, and perhaps not surprisingly, it did well. The fund is now closed, and his firm Penso Capital Market sells its hedging expertise to other fund managers who are struggling to limit losses. Ari is, you might say, one of the original derivatives kids. He ran the derivatives desk at Bankers Trust, and he helped open up the credit default swap market in the mid-1990s. He is currently teaching a course on financial risk management at New York University this year, in addition to running Penso, and he is with us right here today. Ari, let us talk about the derivatives market. People think that it is just a way for big banks to make money. In reality, it functions for many other reasons. Let's talk, though, about pricing and liquidity. When you look at the derivatives market today, what does it tell you about the recovery from the financial crisis?
The derivatives markets now show a great dislocation. Yes, because a lot of people are buying protection, a lot of tail hedge funds who are buying protection and buying at mispriced prices, and therefore they're overpaying and creating a dislocation. You have overpriced hedging and you have underpriced hedging.
Let's try and describe it for people on a scale of 1 to 10, with 1 being the very worst of the financial crisis, sort of the fall of 2008, when there was no liquidity to be had for anybody, and 10 being a very healthy, stable market. Who knows when we've really seen one of those things, but let's say that that's the ideal. Where are we on that spectrum?
We're on a 7 to 8.
So we have recovered quite well, but we're not where we need to be.
It is that we recovered quite well, but there's stuff which is very, very overpriced, and there are great opportunities to be found.
Let's still talk about the dislocations that still exist. The Fed's intervention in financial markets has caused all kinds of, you want to call them dislocations, you want to call them distortions, whatever you prefer. Clearly, the Fed is active in the Treasury market, but that has spilled over into equities. It has certainly spilled over into commodities like gold, and it affects derivatives as well. How extreme has it been, and is it possible to look at these markets and say what they would look like today without the Fed's involvement?
I think today is the Fed involvement.
That is the story. There really is no other story.
It's the story of the Fed, is the story of the ECB, is the story of distortions. This is a market that you can make a lot of money, and you make a lot of money by trading, and you make a lot of money by taking advantage of those mispricings. The Fed is a great opportunity.
But you have to be able to anticipate the Fed's action in order to invest effectively. Rewind the clock maybe 12, 18 months, and it was very difficult for many people to anticipate how central banks and sovereign governments would act, because they had several options at their disposal. We hear all the time about Ben Bernanke's toolbox. Well, it seems as though Ben Bernanke is left with only one thing left to do, which is to extend quantitative easing. Does that make it easier to invest against the Fed?
I do think that the Fed has still a toolbox left. It's not always very obvious, but you have to look at what's out there and find opportunities. You don't have to anticipate. You just have to buy something which is mispriced, and when it actually reprices, you make money, even if the event doesn't happen.
Let's talk about mispricing. When you look at equities right now, are equities mispriced? Are we in the middle of, call it a bear market rally, or are you seeing something sustainable there?
I see that we are in a very long game, and we're at the early innings. There is a lot of volatility. There is money to be made on the rally, like we are rallying, and we're probably going to continue rallying, but there are exogenous events. So this is a bumpy ride. Okay,
let's talk. We only have about 30 seconds left. Where do you see mispriced opportunities right now? Where are the easiest places to get these high-paying trades?
Listen, I've been in the market for 20 years. There are more opportunities now than it has ever been, probably, to find opportunities. They are not obvious, but in every market you have such opportunities.
Ari, so good of you to join us this morning. Ari Bergmann, everybody, from Penso Capital Markets. He sells his hedging expertise to other hedge funds, and we hope he'll join us again soon.